All right, ladies and gentlemen, I got your watch list coming into October 2nd, 2019, and the first day of October did not disappoint. Today was crazy. We closed down 343 points on the Dow, but even crazier, we were up 150 points. So this was about a 500 point swing. It was very big. You see what's on the calendar. You see where we're at with the market, even comparing it to August and everything going on. There's a lot we need to talk about, and especially what made the market come down today. We saw some crazy moves. This was a very sharp downturn, especially relative to all the other days we've seen this week. This was even the impeachment day. This was every single day following since, with the bad news, the China ban, everything. This day dwarfed every single one of those. So what caused this? We need to talk about that, but what it is leading to is the source of volatility for the rest of October. And I was excited today happened, not because of the move, but because of the information it gave. So I'm going to go out on a limb here, but I'm going to say the one thing, maybe two, because we have to always factor in the trade war, but I think it's going to have to always come down to this. The one thing that's going to bring the stock market down, or that's going to cause volatility here in October, it has to do with the federal funds rate and the expectation if there's going to be a cut or not. So that's what I'm going to go over here. We got to go over that, the keys for tomorrow, the plays we made today, and what I'm watching for tomorrow. And I actually have a credit spread for all of you. I think that is a pretty good one. I've already done it. The credit's expensive. We talked about it a few times, and I think it's a good one to kind of get your feet wet in here. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you subscribe so we see you in the morning, because we are live Monday through Friday, 30 minutes before open. Come on. We're trading live. Contribute. Just be positive. Be respectful. Pay your fee. Drop your thumbs up on the video. That's all we ask. And most importantly, post your watch list below. Let us know what you're looking at. Source that information. Be there, even active in the chat, so we could all go over this. This is the game time, baby. We are approaching 1 year on the Chad anniversary. It started with the sourcing of information, so let's keep that train rolling, baby. But let's talk about the keys here. Right off the bat, watch for economic data surprises. Now, this isn't the main thing, but this is what caused today, and essentially any economic data that comes out, we really haven't seen the market react. And what caused this today was the ISM manufacturing numbers. You guys could see here on Trading Economics, here's the chart. It came out and it was a really big miss. They were expecting a 50.1 and it came in as a 47.8. And I think any number below 52 signals a contraction. So they were expecting a contraction of some sort. However, this came in very, 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 very low. And even then, if you come down here, look at the past headlines. This was last month when they released the last month, and again, this is what will probably trip some people out, and this is why today was surprising, because it's not as if we haven't seen a big drop in a surprise. This literally happened last month, but the market did not respond like this, and this is what's leading me to my theory that we have here. But you could see literally last month, it says U.S. factory activity contracts for the first time since 2016. Month before that, U.S. factory activity grows the least in 3 years. U.S. manufacturing weakens since 2016. It's bad headline after bad headline. This, however, was the weakest in 10 years. So this was still big. I'm not downplaying that. However, for the market to respond like this was very, very interesting. So watch if there is any other data surprises. I believe we're getting non-manufacturing coming out here tomorrow, but you can always just check the economic calendar here on Trading Economics. Post it below if you think there's anything to watch. But the key moving forward from here and throughout the rest of the month will be rate cuts and the probability. Here is the Fed rate cut tool. We've talked about this and we've looked at this a lot coming into the Fed and Jerome Powell and all that. But how this is going to have an effect is very, very important. And today it changed. Yesterday, it was about almost 50-50, but people were pretty much 57% of the market was expecting that the market wasn't going to cut coming into the October meeting here in literally 4 weeks exactly. But now it's at 36% are saying that, and most people now, or the majority, is pricing in a cut now. And this is important, and this is what I'm saying is going to be the cause for the volatility, because the last meeting's dot plot, what they were saying, every single person on the Fed, despite them having that cut, every person and board member on the Fed said they are not expecting a future cut for 2019. But now the economic data that's coming out in a big surprise like this is pointing otherwise. And now this is going to start changing the whole scenario with what you're seeing with the Federal Reserve, my friends. I mean, mark this video. You're probably going to come back to it, and I'm going to say something about this again, because now the fact that they've cut one more time, that was the second time, that is the full-on quote-unquote mid-cycle adjustment. But now if the data keeps getting worse and the Fed starts in the Fed futures market, the futures start pricing in another cut, and the Fed ends up cutting when they said they weren't going to cut in 2019, and they've all agreed that is the extent to the mid-cycle adjustment, and then they end up cutting, that is going to be a problem, and that is going to signal a warning sign. So this is why this is so important. So watch how any data, especially now, this is why, again, this is what I believe will be the source of the volatility. But at the same time now, this could go hand in hand with the trade war. So if the trade war now adds on top of this manufacturing, let's say the trade talks fall apart and it leads to now more panic, and then the bond rates and everything starts going down, the same thing's going to apply. But hopefully you guys are seeing the background logic. But this is the one thing that will crash the market in October, and it has to do with the market's expectation for a rate cut and what the Fed has already said. There's a big cognitive dissonance, more or less. We're getting back to the days now where the Fed's saying, no, we're done cutting, a hawkish Fed, but now the market and the data is saying, no, we need a Fed cut. It's right here. We have to. And now watch the battle of the two. And then you're going to have Trump in the middle there. Yeah, you're pathetic. You suck. Blah, blah, blah. So this is getting interesting. So pay attention. That's something I'm going to be watching for, and I hope you guys do. And hopefully you guys are caught up to date with everything going on right now. And then finally, on top of the trade war, Mr. Yuan, again, he's in a dangerous place right now. And the crazy part is, I don't know if he's doing it to himself or if somebody's hurting him. Either way, he's at the danger zone. The yuan is getting weaker and weaker. It's actually strengthening a little now, but it's kind of coming back up. And this is what we talked about. Here's August 26th or 23rd. Here's August 5th. But now the market's starting to look like the yuan. And that's what we were talking about earlier, that when the yuan was weakening a few days ago, the market was still pretty up. And now it's starting to reflect that. Now we're getting back to those August 25th near those levels, and then the August 5th level. So you could see this isn't a good sign. And what I mean now is somebody hurting Yuan, or is Yuan hurting himself? It's the question of, is it China weakening their currency, or now this is what Donald Trump went after Mr. Powell a bit today with the strong dollar. The dollar hit a yearly high. It's actually back to the high levels of 2017. This was after the election, which is pretty interesting to think about. So currencies were going pretty crazy there, but if the dollar keeps getting strength, that's going to wreak havoc against all the other currencies. So this is important stuff to watch out for. But this, again, all going hand in hand. And if the dollar's making a move, watch the banks and then watch bonds and TLT. As far as strategy and plays, if you guys saw, we did pretty good on the credit spreads. This was one of the accounts saying we were down, but we pretty much made around like $300. And this is a small account. And the other credit spreads we have, most of them are barely down and some are up. And I'm actually going to show you some of those. But at the end of the day, this is what I'm going to be doing. I'm going to ride the wave down a little bit with these credit spreads, because today was a big down day, but it was very, very hard to profit on the puts, because as it would drop, the puts were somewhat expensive. Then they would shoot up 200%, then it would bounce, and then they would drop 50%. Then it would bounce and come down. They would come up a little bit, but then after here, they would lose their value. It's a slow walk down, and it's very, very hard to profit on that, especially when the VIX is still somewhat lower. Even then, a VIX below 19 is pretty much even showing a lack of fear, if anything. So it's hard to play, but if it does cuck like we've been seeing, you're able to profit off the credit spreads. And that's kind of what I want to do here with the walk down. Profit on the credit spreads as premium starts to decay. Then if the market does start bouncing, or when it does kind of bounce and does this back and forth, this volatility we're expecting in October, then I'm going to come in and buy the second wave after selling the first wave. Because again, at the end of the day, like we've said, it's looking literally like August to a degree, but just at a slower pace now. It's not happening in 3 days versus, the last 12 trading days or so, as we've seen. So keep that in mind, but let us get into the plays. As far as plays we made today, we profited off a lot of the spreads that worked just pretty much in our favor. And then here's another thing. I remember I told you guys that play beyond. Here's the craziest thing. We instantly got exercised or assigned on that option. Now, that pretty much means we made that trade yesterday. The max loss was $60 because of the credit, and we lost. But a lot of people were worried about what to do. And again, some people were even worried about additional fees. Some people said we don't know what's going on with the fees. And again, I was aware there could be a hard to borrow fee, but I was pretty sure that you wouldn't get that charged through Robinhood. And again, this is what happens. So some brokerages, I know Tastyworks will probably charge you. So this is where it's on you guys to go and check with your brokerage with making these trades. Hopefully you see the risk of assignment with these trades, especially the strategy I'm doing, because I'm going to show you another trade of selling an in the money option. And usually you don't get assigned on these. We did that Anthem play last week, and that one had a $180 credit. It was like $10, $15 in the money. Now it's only $2 away from the money, but it never got assigned. It definitely has to do with each individual stock and the events that would warrant and make it a rational decision for whoever's holding that contract to assign you. There's something happening with Beyond. And so even then, that's even making me think they might even go up, because I think with how much it's been shorted, I think it's such a high short interest. I think there's a heavy demand. But at the end of the day, too, if you're ever worried about this, I'm showing you what I did. You could always reach out to your brokerage and understand, too, option trading is extremely risky. You can't lose off that most of your financial investment. Please consult with a financial advisor. This is educational purposes, not as a recommendation or financial advice to make a decision on your investment portfolio. But seriously. But here it is. I said it looks as if I was assigned on my Beyond spread I took today. Please make sure the call I own exercises right away, as I don't want to short the stock given I was assigned and want to transfer that liability to whoever sold me my call instead. Thank you. Again, you don't have to do this. I do all this stuff just to be safe, and this is because I know my rights as what I'm holding. I own a contract and I sold a contract. Someone assigned me. I know my rights. Know your rights, baby. Can I search your car, sir? Dad, you better know your rights. Don't self-incriminate yourself. Don't say shit. Just type it up in an email and get it in writing, baby. And they said, hey, Josh, thanks for reaching out. Yesterday, you were assigned in response to cover this assignment and mitigate risk. We exercised one of your long Beyond calls. Your balances may seem off, but it's simply a result of trading, and your restriction will be lifted tomorrow. Let me know if you have questions. And I responded back, thank you. Please do not give me the shares at all. I do not want to pay a borrow fee and want my risk to be capped to the collateral I put up. Again, getting this all in writing. Hey, Josh, there is no borrow fee. Your loss on the trade is the collateral minus credit received. Let me know if you need anything else, baby. So if you're on Robinhood, you should be good to go. If you want to send them a support email as follows, just to triple, quadruple check, go ahead. Other brokerages, I'm not sure. But again, you might be able to get away using the same thing and saying, hey, make sure you don't hold the shares. But next time, do this as soon as possible so that you could just assign your right to the next guy. But there was that. That was the Beyond play. As far as other plays we made today, I was making a lot of money on some of the spreads. So I said, hey, we're coming down. I want to take advantage of certain plays. So what I did, I sold an Anthem. I used the real estate guy's portfolio because we got locked on the Robinhood. And again, I didn't want to get charged there's certain fees even with Tasty Work, and I'm kind of sketched out doing, again, with Tasty Work on these because I've been selling in the monies. And what I did was I sold puts now on Anthem. Remember, we sold the calls, and I'm up on those. So I said I'll sell some puts here. I sold a $242.50, and then I bought the $240, collected $163 in credit, and it bounced, and we already made money. And I really like that on Anthem because it's literally just pretty much saying it goes back up to open. And I've talked about this. I said watch for a rotation here. So that's the first play we made. Then I did a Disney. I did a 131 129 put. This was the same one I have on this account, and this is what I even told you guys. I'm averaging down myself on this one pretty much. Remember, I'm down on this one, but this one expires at the end of this week, so I put one more week out. I got $89 credit for the same trade. The collateral, the risk ratio is a little different there, and then Disney even kept dropping, so you could get like 10 more extra bucks, but that's the next play I made. And those were pretty much the two other bounce plays that I made, or plays where I wanted to sell some of the downside if the market did bounce up to protect my other stuff. But we did have a big amount of success here on this McDonald's. You guys remember this play. I put this in that video this weekend and said, this one was an in-the-money play. We didn't get exercised for 2 weeks. It fell out the money. We got a massive amount of credit from that one. So those were the only two plays we made. There's other ones I want to watch out for. Watch Home Depot and McDonald's, and we're going to watch out for some of the other plays. But here's that Home Depot play I was telling you guys about. A lot of people were asking questions on credit spreads, and again, even kind of where the market is. You can see Home Depot is better. I was going to sell another one of these today. I'll probably do these tomorrow because Home Depot likes to make a move. This play would have been fire in the morning, but again, and it dropped there, so that's why I was kind of hesitant by doing it at close. We'll see if they have a bounce there, but this one, and I'm down on this one now, as you guys can see, but it's October 18th, about 2 weeks out. It's $120 credit, so it's a $250 difference. Your max risk is $130 net because of the credit here. You could sell it for a little more, and this morning it was at 170, so you could have got 50 more bucks, about 30-40% more than what I sold it for this morning. And you see it dropped all the way in value, but it's a sell a 230 call and buy the 232. So literally, you guys see here, you sell the 230, you short that one for 463, you buy the 232. And there you go, you collect the credit. This one I like. This one I like in the sense of if the market does start to go down or get volatile, we start seeing, it's this kind of the second bounce up you've seen. Home Depot could do this. If it caps out and craps out and doesn't start to rally like it did earlier at sometimes, then you'll lose. But I think it's going to come down. And even if it does start going up, if the next 2 weeks, I think there's a good chance it could do what McDonald's just did. But if not, we'll roll over until it does fall, because Home Depot's been doing good. And even on the 100-day, the equilibrium is a lot lower than where it's at, and it's been a behemoth. So keep your eye out for that. But that, what I would say, is probably the play or the credit spread of the week so far. I'll give you guys that one right there. So I'll see how those are in the morning. And then another one, actually, these are what I want to watch. You guys see Bank of America dropped. And hopefully you guys please watch the credit spread video. And this is where I'm saying with the strategy, like I said earlier, I'm riding the wave on all of these so that these are all going to fund purchases to just buy more. But you guys remember, we did this one. This one, we got $38 of collateral. So it's a $12 risk on the 50-cent difference. But now these were deep in the money. They fell. You can see it was worth $39 today. It fell out of the money. That's just easy premium right there. And if it keeps dropping, so watch those Bank of Americas. But now watch the banks in general. Watch McDonald's. I'm going to keep my eye out for that to see what it does and if it goes lower. And if it shows strength, I might even close out of that call and sell puts on it. Watch Apple now too. We have debit spreads and credit spreads in waiting, but they were a behemoth today. They killed it. They still ended up 0.5% up, probably one of the biggest leaders. And now there's a reason. Somebody even brought this up. They said it's probably even the Buffett effect. Even take a look. Literally have some of the biggest volume here. I mean, it's kind of phenomenal, because not only is this high volume, you're at one of the highest prices. So I think this is saying something, but Apple is showing some really big strength. But this is where I didn't add any more credit spreads. We're just holding, but we'll see what we could play on this. Maybe we do another one of those Friday lotto plays. Like I said, watch HD, watch Disney, and then watch FedEx. This is one I didn't make a play on. I like where it's at. It sucks because it's literally hitting a multi-year low. It's literally about to break this 3-year low, and this is a crucial level for it. So, and again, you can see how the volume's been high. I don't know if we're going to sell puts on it or sell calls, or even if we buy puts. This one's kind of all over the place, but watch how transports and all these moves. I think they're going to set up a good play there. So watch that. Watch TLT now. Watch them in relation to Bank of America, but everything we're saying with the bonds and all that, I think we might see one more big push on TLT now. If we start to see those rate cut odds start flipping around, TLT may start to be a monster. It has a lot of volume here today. It's been consolidating, so some of the prices are low, but a lot of those options are still holding up their value. So you have to realize those Novembers, it's been 2 weeks, and they're still holding up the same prices. Same thing with those Octobers. These contracts have decayed so much, and the prices are still holding. That means they're expensive. So you got to watch out for that. But I like what the bonds are doing in general and think they could do there. And this move that it had today was unreal. It was psychotic. This was a big 1 minute candle there, and even the banks dropped. But overall, watch TLT and watch what the bonds do in general. Watch UVXY. That's another one I'm going to be looking out for. Those options now are still cheaper. And like I said, the VIX hasn't really popped up here. If it does break out here and we do start seeing something, then they're going to start getting expensive-er, but they will still be cheap. So if anything, I do like the UVXY as the volatility play. But the thing is, people are not rushing to the UVXY just yet. So keep your eye out for that. If there is a bigger long push, and we were saying, yeah, get very bearish, this is probably going to be your best bargain. But now it still has the most risk because people aren't flocking to it. Watch that. Watch Microsoft. I like them as well. I was considering selling a credit spread on them depending how they play out. They drop pretty big, but they are kind of like Disney, and they hold their range, and you can see how they've kind of been here. I'm very, very looking forward this to credit spreads, or you get some longer dated options on the put side. If the market does start to fall off, these could be the good ones. So that's why I might even think of selling some put credit spreads to collect premium, and then buying some puts that are longer dated just in case it does surprise. Then watch Shopify and watch Roku. They did good today, and Roku did good. And I said, watch out for the shitty stock rotation. Sometimes when the market starts to sell off, any of these stocks that have been really beaten down, they're going to start going up and actually hold up because people have already rotated out of them so heavily. They're going to get out of the other stocks, and these are going to kind of keep their value. But watch Roku and watch Shopify. I think Shopify could sell off more, and I think Roku might be a little deceptive. I think both of them could sell off more, actually, now I think about it. And I think Roku could really, really surprise there. But if anything, that put spread we bought last week on Shopify, that's pretty much dead. So we'll see how that plays out. But Roku, I might want to sell some more premium on there. And then silver. SLV, I said, wait for it. Again, now it had that big drop. It's been 2 days later. So see how this consolidates and holds up. The premiums might be a little good there. Those SLVs we bought for 7 cents are pretty much half off. I bought them at 6 cents, so they've definitely gotten cheaper. So depending on how this moves there, or maybe we even go for, I know somebody picked up some Novembers today. We'll see if we could get those at a better price, but watch those and watch for that bond bank lag we've been talking about. Then finally, we got Beyond. Keep your eye out for that. Like I said, I'm bullish after the whole exercise fiasco there. I think that got my attention, so keep your eye on them. Watch Ameritrade. They announced today that they're doing free commissions after hours, because if you haven't noticed, Ameritrade and E-Trade have been getting clobbered because Charles Schwab now announced free trading. This is going to change a lot of their business. The competition has changed a lot for these companies, so you can see why people sold off the most in a very long time, because this is big news, you know, and the most volume in the last 5 years for a reason, because the company now won't be able to get a big source of revenue that they were already getting in the first place. So this could affect clients, acquisitions, everything. So the competition's heating up. There's a reason they're all doing this. So watch for them to bounce now, and maybe watch for the last, I think E-Trade's the last one to get on train, so they could drop. Then watch Tesla. They've been going up, and we are surprisingly still down on that one Tesla spread, but I like where they're at now. I think if the market has some stuff, Tesla's been going up, the contracts are getting more expensive, I might want to sell another call here with a little bit more time if it keeps up. I don't know if I could really believe it, but if it does come up from here, it could break out. But Tesla has good volatility. Someone even brought up an iron condor on Tesla, and that could actually be decent. Oh, and that reminds me, watch Boeing too. I forgot about that. We have that iron condor, and they're at a crucial spot. I'm like $4 or $5 away from the break even now, and we got like 3 days of time, but they had a pretty big drop, and watch how they're going to fluctuate. Watch how they could even lead the Dow. But back to Tesla, I'm going to sell that on the calls. I'm going to look for that. Watch Netflix. They're kind of leveling out here, and I think this had to do with those streaming stuff and what we've seen there. But if the market starts to come down again and we see that sell-off in tech, I think Netflix is going to be one of the first to go. So I'm going to actually maybe look to even get some middle date puts there, or even sell some calls there. Watch Disney, like we said, and then the values. Watch Coca-Cola. You have Pepsi earnings this week, and watch Hershey's. See if there's any sort of rotation in what the value stocks do around this level. That's what's going to be key, especially as the market starts to pick up in volatility, or if we see that. But that is your watch list, ladies and gentlemen. Be smart, be respectful, be positive. I hope you're ready to go in the morning. Stay hydrated, healthy, keep your head in the game. Check out the videos on the tutorials, ask questions, come on stream, but get ready. This is the volatile moment. If you get greedy, you try to disrespect the market, you go too big in your position sizes, the market is like coming into the chat on disrespectful hype shit. It will clap you, no second guessing. It's like posting a rocket ship. It don't matter who you are, you will get clapped. The market will take no prisoners. So be smart. I want you to be a sniper, be methodical, be very just in the game, and don't let the emotions control you. I'm telling you guys, that's why I'm mixing it in with both spreads and buying. It's going to be fun. You guys are going to learn something. If you were around last October, you got to see history. I think we are living through history in the making. So keep your eyes posted or eyes peeled. Keep posted on here. Stay ready to go. If you didn't make money, you didn't lose money, at least you're gonna learn something, baby. Let's go.